This is a special interview produced for download by Aspermont Media. I'm Paul Hunt. In this issue, we focus on Canadian-based Saturn Oil Gas, an onshore oil producer in the province of Saskatchewan. Dual-listed Saturn trades on the Toronto Stock Exchange Venture under the ticker SOIL, and also on the Frankfurt Stock Exchange as SMK. The company's boasted a remarkable 2021 so far. The big highlight was an acquisition which drove an incredible 2,000% increase in oil production. With steady cash flow, the company's looking to new areas of growth, as you would. To tell me more about this is Saturn Oil Gas Chief Executive John Jeffrey. John, welcome to the program.
Thanks, Paul. Happy to be here.
Your company completed a huge acquisition this year, the Oxbow asset. That's transformed the company from being what was quite a small producer to one of the largest independent producers in Saskatchewan. John, tell me a little bit about the acquisition and how it changed Saturn.
So Saturn had a proven track record of developing lands that other people had overlooked. Prior to this, we've never purchased land with production or with reserve booked on it. So we've relied on our outstanding technical team led by Justin Kaufman to create value where others have missed it. This acquisition gives Saturn a large, stable production base and will serve as our cash cow to further our exploration efforts throughout Saskatchewan. We're tremendously excited to own this vast land position in the southeast. Aside from the attractive acquisition metrics at only 14,000 of flowing, the asset has exceeding upside in both primary and secondary reserve potential. With the current oil price, we're able to repay all of our outstanding debts in the next 3 years while growing production. This has been such a game changer for us, and that's why we're so excited to be here to get this acquisition and be talking with you today.
John, so I calculate that you bought oil reserves at $2 per barrel and production for under 1.5 times cash flow, if I'm right. Now, that's not normal acquisition metrics. Why was this deal so inexpensive?
Yeah, in a word, timing. When we entered negotiations last fall, oil was hovering around $40 a barrel after one of the worst declines our industry has seen. We were lucky to get the deal priced in at that time and to have the strong rally that we did going into closing. When we went to put our hedging in place, oil was around the mid 60s, and at the time of close, it meant the net price we paid was just over, like you said, 1.5 times cash flow, which is an exceptional metric.
That's a fairly big acquisition, Oxbow, for such a small company. How did you make it happen?
Well, we got really lucky. We were able to raise over $120 million in capital. At the time, our market cap was around $30 million, so it was a stretch for us. We're lucky to be partnered with such strong debt partners that could see the value in the cash flow and could see the upside. And then, we're quite lucky to be partnered with such loyal shareholders who trusted us to execute on it. With that, in addition to some of the institutional partners that we're new to the fold for Saturn, we're really lucky to have that capital where lots of other people in the space just haven't had access to it.
My guest is the CEO of Saturn Oil Gas, John Jeffrey. John, 95% of Saturn's production is oil. Why is that the company's focus?
Well, North America has been oversupplied with natural gas for over a decade, and that has offered challenging economics for all but the largest gas producers. With few overseas export opportunities, we thought it'd be prudent to remain focused on what we know best, which is oil. With more egress options coming on each year, for example, Enbridge Line 3 is coming on in the next couple of weeks, Trans Mountain's coming on next year. Alberta has greatly increased its rail terminal takeaway. We're just seeing takeaway capacity at its highest levels in Canadian history. We think the economics are far better off focused on oil, and at the end of the day, it's exactly in our wheelhouse and expertise.
So looking forward then, what's next for Saturn?
Well, the biggest impact that came as a result of the Oxbow acquisition is that Saturn now has long-term steady cash flow, and we're able to redeploy that cash flow to increase shareholder value. Immediately, we're focused on increasing shareholder value by retiring debt. Although we have a top-tier debt-to-cash flow ratio, we understand that price volatility catches even the healthiest producers off guard, and we want to protect against that. Best way to do that is with a diligent balance sheet management. That being said, we're always thinking about the future, and we have a capital program that allows for growth as well. So we hope to be in a position later this fall to give full year guidance for 2022, and I think our investors will be pleased with the balanced approach we are taking. Our target is to exit next year with over 8,000 BOE while having over 50% of our debt retired by then.
Why the focus and importance on debt repayment?
Well, a core part of our growth strategy is to acquire additional producing properties within our footprint. We have achieved a strategic advantage by acquiring such a large asset base. We have facilities, pipeline, infrastructure, and the internal expertise to carry that out. So by adding more assets, it just increases the netback we're seeing in the field. By reducing debt levels over time, it'll increase our capacity to make strategic acquisitions as they present.
What do you expect the next acquisition to look like?
Well, the thing with Western Canada right now is there really is a lack of capital coming into the space. So we've seen a lot of smaller producers get themselves in trouble in the last few years with the volatility in the differential and with the oil. So there are a number of smaller producers that are either backed by private equity or just don't have the access to capital to grow. A lot of these guys are taking this uptick as an opportunity just to cash out. So we are looking in the Southeast. We are looking in the Viking. We are actually looking at a number of acquisitions right now. So it'd have to be something in our wheelhouse, which is our technical expertise. And it's going to have to be accretive to our shareholders at the end of the day. Obviously with our focus on debt repayment and the technical skill set we do have, that does open the doors for a lot of different targets. But we are going to be focused and maintaining that balance sheet discipline.
The Oxbow asset, that would be considered a mature asset. How does that impact how you operate these fields?
Well, one of the upside that comes with that is that we have one of the lowest decline rates of 12%. But even with that, there's still tens of millions of barrels left to be produced. And with advancements that we're seeing in secondary and tertiary recovery, with water flooding and CO2 flooding, our reserves are likely to grow over time. Now, on the flip side of that, in it being such a vast, well-developed field, we do have asset retirement obligations to deal with. And one of the upsides that we have at our advantage right now is that as it stands today, we have over $15 million from federal grant money for retirement, in addition to our $21 million deposit with the Saskatchewan government. So for that right now, we have well over $30 million that we get to deploy towards retiring old and obsolete wells. In addition to recompleting those ones, we have over a third of them earmarked to be recompleted. So we think we'll be in a very healthy position going into next year with an increase in production and a lot of capital focus on retiring those asset obligations.
How is Saturn managing, such rapid growth from the Oxbow acquisition?
One of the best assets that we got with this, it isn't the pipelines, it isn't the land, it isn't the production, it's the team that came with it. We're very lucky and very fortunate to have such a strong team in the Southeast, led by Brad Caldwell and his staff. So we were able to retain all that talent. And this is a team that has worked these assets for many, many years. They're very familiar with the area, with the vendors, with everyone down there. So by maintaining all of that knowledge and skill set in that team that does operate the field, that has been one of the biggest keys to our success, and that'll be something we continue to leverage moving forward.
John, any final comments? What's your outlook?
Well, while our near-term goal is to reduce debt levels while growing production base, ultimately we intend to become a significant Canadian energy producer. But we can't lose focus on our responsibility to our ESG commitments. Saturn does aspire to be a leading example of what it means to be a responsible corporate citizen. This is embracing the Canadian values of human rights and equalities and dealing with our stakeholders and employees. The world needs Canadian oil, and Saturn's goal is to deliver it in what we consider the most ethically manner possible.
John, we're going to have to leave it there, but thanks for your time.
Thank you.
John Jeffrey is the CEO of Saturn Oil and Gas, and you can follow all the exciting developments of Saturn at saturnoil.com. This podcast was produced by Aspermont Media.